Welcome back to Fast Money. Amazon shares soaring today as Wells Fargo crowns them king of the retail rainforest. The firm out with a new research note saying the company has surpassed Walmart as the #1 apparel retailer in the United States. Wells Fargo forecasting Amazon sales grew roughly 15% in 2020 to more than $41 billion, which is about 25% above rival Walmart. We're joined now by Ike Borochow, the senior analyst at Wells Fargo and author of the note. Ike, great to have you with us.
Thanks, Melissa.
Amazon has made great strides, and I know you pitted Amazon versus Walmart. I mean, those are two interesting players. You actually don't cover either of the companies. So is a takeaway from that Amazon's massive gains in apparel, which includes, in your research, third-party sales, is that to the detriment of some of the companies that you do cover?
Yeah, no, so we co-cover Amazon. I think it's a great question. So we've got we estimate $40 billion of apparel or soft lines revenue that Amazon's doing. To put that in perspective, there's only 6 retailers who do over $10 billion in all of the United States. So this is a big number, and it's 12% share of all U.S. apparel. So this is a big number, but I think you got to look under the covers a bit. And this has been an ongoing debate and dialogue about brands and retailers versus Amazon and soft lines for some time. I think if you look at that $40 billion, our view is that that's probably a lot of basics, a lot of replenishment, a lot of private label business. I think where Amazon has still not made the inroads that they really want to is on the fashion side. Fashion apparel, fashion denim, dresses, that kind of stuff. So I think that continues, and so it's an ongoing debate that I think goes into 2021 and beyond.
So, Ike, when I look at your ratings, it seems like the Amazon-Walmart debate, as you just answered Melissa, has a problem with, or should have a problem with the high-end luxury names. So a name that I've been long for quite some time is one of your names, Capri Holdings. And with Burberry and Cucinelli pre-announcing positively recently, that's another tailwind for a name like Capri. I saw you had a $60 price target on it. Don't you think this thing could go much higher, given what you just said about Amazon and a Walmart not competing there?
Yeah, so we totally agree. Capri is one of our top ideas, so we're on the same page here. What I would say to bring Amazon back into the conversation is that if you want to compete with Amazon, the middle is where you don't want to be. You want to go high, you want to go low. So when you talk about Capri, you've got Michael Kors, accessible luxury, and then the crown jewel is really Versace and Jimmy Choo as well. So you're doing that on the high end. And then on the low end, think about off-pricers. Think about TJ Maxx, Ross Stores, Burlington. That's a good way to avoid it because the value that those retailers offer, Amazon can't match. So again, going high and going low is the way to go. For Capri, look, I think this is one of the few calls that you got to stick with in retail right now. The group is run. Our group's up 75% in the last couple of months. I haven't said that since I think 2010. So it's great, and it's great to be a bull in retail. But now you got to start looking at names that are going to have duration. And I think because of those luxury assets that Capri owns and because of what they're doing to stabilize the Michael Kors brand for the first time in a long time, that call has duration. That call can keep working.
Just a bottom line, it sounds like you're kind of not that concerned about Amazon's share in the market. I mean, it is about, as you outlined, a third of all online apparel purchases in the United States. You're not that worried about it because they are selling basics?
I'd be worried if I sold basics. Right. I think an underweight rated name, Karen, to call out would be Hanesbrands. So we have a sell rating on Hanesbrands. What Amazon is doing right now is they're going after, think about it, packed up T-shirts, bundled socks, underwear, going at it with private label Amazon Essentials. It would concern me if I was a player in that space because that's really where they're targeting.
Ike, great to speak with you. Thank you.
Thank you.
Fascinating research. Ike Borochow. Karen, how do you sort of connect the dots with this research report and the retail names you like?
Well, a few dots there. I mean, Walmart, of course, which I have a position in. Target, which I have a position in, which does differentiate itself on fashion, which is something that he was talking about Amazon trying to do. And then, I think that I don't love hearing Amazon sort of taking over Walmart's position, but I think Amazon, Walmart, and Target have all gained share, and I don't think they're going to be giving all of that share back at all because they've been able to pivot, and Amazon, of course, they were already doing online very, very well, but now I think Walmart and Target are doing it very well also. So I think they'll maintain that share, and the differentiation, even if you take out AWS, the Amazon valuation is so much higher. So I'm long all three, but my biggest position, Target, Walmart, then Amazon, much smaller.
Yeah, I mean, Guy, for some reason I want to go to you on this because I feel like you'll have some comments on Hanes brands or whatnot. But I mean, it's worth noting that Target does have a multiple billion-dollar brands under its own umbrella that it has built itself.
Yeah, there's no joy quite like the joy of opening up those bundled socks and underwear from the Amazon every few weeks. I mean, I just can't control myself when they make their way to my door. But he makes a great point about Hanes brands. I mean, you don't need Hanes brands when you have Amazon. What I will say is great job by Steve on Capri Holdings. And the other name that's going to be really interesting tomorrow is Dow Gen reports before the bell. That stock obviously has come off significantly since the all-time high back in October. I think the setup for Dow Gen is great, whether they miss or not. I think if they miss, you buy the dip, and if they come out with a great quarter, you buy into the strength. So for an opportunity tomorrow after earnings, Dow Gen to me is really interesting here.
All right.
Shepard Smith here. Thanks for watching CNBC on YouTube.